So first of all, welcome back from lunch. And I hope my presentation will be not boring, so that you awake you. My topic today is trends in stock exchange consolidation and what are the trends and perspective you can see from a Southeast European perspective. And fact is that consolidations are going on tremendously since 2000. And what are the key industry trends which drive consolidation? On one hand, it's of course the increasing power of investors, meaning investors are becoming more and more global and they are not anymore bound to their home market as they have been before. Now we are looking for investment opportunities really in each corner of the world. Additionally, more and more brokers are offering to institutional investors direct market access, which also drives the consolidation process, because if one broker is already connected to an exchange, offering direct market access to the central order book, and the exchanges can offer products in various stock exchanges, then of course we will connect to the exchange which offers them more products, more liquidity, and a higher market capitalization. The second thing is also the change in the international regulatory environment. For example, MiFID in Europe really increased tremendously the competitions and therefore also the consolidation process. It's much and much harder to survive as a smaller exchange surrounded by a lot of major global players. I will show you some examples where it was possible as even a smaller exchange to grow and to survive. And on the other hand, you will also see that even if you're a larger exchange, that doesn't mean that there are consolidations which will not cover also your exchange. And of course, the increasing importance of technology. Everybody is speaking about high frequency trading, low latency. Fact is, in our region, low latency doesn't play a role currently, but it will do so in the next couple of years, of course. And then the exchanges have to be ready to offer high frequency trading, direct market access, and low latency to its participants. And of course, economies of scale drive a consolidation process. Having in mind that IT systems become more and more complex and complicated, they also became more expensive as they have been before. Therefore, sharing IT infrastructure can be very beneficial for exchanges who join forces. Now, what have we seen since 2000 in the exchange industry? We saw a lot of mergers, we saw a lot of acquisitions, starting in the year 2000, where Euronext was formed, combining the market from the Netherlands, from Belgium and France, creating the first really large exchange group within Europe. In 2001, Euronext even bought the derivatives exchange Live because it was missing at that time a globally acting liquidity pool for derivatives. And the trend was going on by New York Stock Exchange acquiring a European stock exchange group, forming NYSE Euronext. Now, what are the smaller European exchanges doing? We have here, for example, Wiener Börse, which is compared to the players in France, in the UK, or in Germany, really a small niche exchange. Based on a strategic plan which was developed in 2002, capital market development was set as #1 priority of the government, and regional outreach was a second priority in there. To reach that target, Wiener Börse started to looking at regional exchanges and found a first candidate which was willing to team up, and so Wiener Börse bought a minority stake at Budapest Stock Exchange, forming with other Austrian investors the majority in there with 68%. In 2007, OMX also tried to expand its network because it saw that even though they already grew tremendously, that there was still a further need for expansion. And they where I was on emerging markets. So as a first try, we bought the majority, 100%, from the Armenian government of the Armenian Stock Exchange. As example, how you, as an international acting exchange, can help the emerging market exchange to develop and to survive. Even though OMX was very active in this area, we were taken over by Nasdaq, with moving the headquarters from Europe to the US. In the same year, the exchanges were quite busy because London Stock Exchange bought Borsa Italiana, forming an inter-European exchange group with the perspective to share the IT infrastructure and also the clearing and settlement systems to be harmonized. And we have also a regional example in Croatia, where Zagreb Stock Exchange and Varaždin Stock Exchange merged and formed a new exchange with a new IT trading system, also with the focus to become one of the leading exchanges in the region. If you see the trading numbers afterwards, you will see it happened, it's reality. Based on the fact that the exchanges were starting more and more to consolidate, Wiener Börse saw also a need to further expand its network, and it was, I think, quite one of the most busiest years of Vienna Exchange, because we bid for Ljubljana Stock Exchange, we bought the majority in Budapest, we bought the majority in Prague. Now really forming an exchange group. Now the question was 4 exchanges, 4 different trading systems, 2 CCPs, 2 commodity exchanges, and different CSDs, what to do next. That leads us to last year, because last year the CE Stock Exchange Group were formed, combining all the 4 stock exchanges as independent marketplaces, but setting up the holding as provider of centralized functions like a central services, international marketing activities, as well as a common shared IT infrastructure. In the year 2010, also Montenegro Stock Exchange and NEX agreed to combine. You see, it seems really that stock exchange consolidation is a trend, and if there is a trend, there must be a need behind it, because if an exchange is very profitable and the market is very liquid, you would never join forces if there is not either something behind in the strategic plan, or you see that you can grow only if you join forces with somebody outside of your country. And 2010 didn't mean that the consolidation process stopped. There was a takeover bid from Singapore Exchange for the Australian Stock Exchange, and here we see for the first time that exchanges are a matter of national pride, because the Australian government said, no, we won't sell our stock exchange to a foreign exchange. So in April, just some days ago, Singapore Stock Exchange announced that the merger will not happen, because political support from the Australian side is missing. On the other hand, we see London Stock Exchange making a bid for the Toronto Exchange Group. And here we are already in the next stage. We are in the approval process by the regulator, and we will see within the next 3 months if we get green light to combine forces. That would mean, again, an overseas combination of markets by sharing the IT infrastructure. At the same time, in February 2011, we learned also that Deutsche Börse would like to take over NYSE Euronext. Already after 2 or 3 days of the announcement, the mass media were full saying, how can a European exchange take over an American-owned exchange? That means you have here different protective forces. Europe was, in the case of Euronext and OMX, quite open to let them combine to one exchange group with headquarters outside of the US. On the other hand, we see that there are less willingness to accept that if a European exchange is taking over a US-based exchange group. At the same time, a counteroffer was made by the Intercontinental Exchange and Nasdaq OMX with a 1.3 billion higher price than the first offer of Deutsche Börse. And now we will see what the next step will be, who will win the race for the merger. But I think you are more interested who are the major players in the regions and what are the regional effects. What can I expect as member of the Macedonian Stock Exchange in the future? How will my business case look like in some years? Will I be a regional player or will I be only a player in Macedonia? I think you will be a regional player, but the future will show it, of course. And we also have to have in mind that we have three major players active in the region. It's on one hand Warsaw Stock Exchange, which is currently not looking for buying exchanges. We are more looking forward to acting as IPO factory, attracting listings, attracting IPOs of a region. And already roadshows in Ljubljana and in Zagreb took place, where we tried to convince companies to list there instead of a local marketplace. What would that mean for the local marketplace? It means liquidity moves away. But a capital market is not only a liquidity provider, a provider of finance, it's also promoting business locations. We have a very good example seen in Kazakhstan, for example. In Kazakhstan, many of the companies were approached by London Stock Exchange to list on their market. And in many cases it really happened, and after some years we moved also their headquarters out of Kazakhstan to London. That means capital market policy can be also a location policy. Meaning the more stronger your capital market, the more company headquarters you will have in the country, which is something which is normally not really observed by the governments when we are thinking about shall we support the capital market or not. Another major player is of course the CEE Stock Exchange Group, which has combined 4 marketplaces in the region, where last week there was a media release saying we are looking for further takeover candidates in the region. It was not really released which ones, but it's clear that the focus will be on Southeast Europe. What is the rationale behind the CEE Stock Exchange? Of course, it's sharing the IT infrastructure, becoming more attractive for international investors and to reach the critical mass. Everything based on the home market principle, meaning that listings should take place in the home country of the company as far as possible. Then we have a very strong player in the region, that is Istanbul Stock Exchange, which are operating very successfully a large market with a lot of companies listed and with a good infrastructure in place. And we are currently rumors in place that Istanbul Stock Exchange will buy a minority stake in one of the CEE stock exchanges. So you can clearly see there are a lot of alternatives for Macedonian Stock Exchange what to do. On one hand, you can stay alone, trying to compete with your regional competitors. You can join a loose alliance. You can become even part of a larger exchange group. All of it will have a direct effect on you as trading members. I will skip one here, because I think it's much more important to understand how does the market look like in the region. Who is really the front runner? So if you compare Warsaw with the CEE Stock Exchange Group, which is listed here in red, you see that we are more or less comparable. If you have a look on the Southeast European exchanges, that you clearly see that in regard of trading volumes, Zagreb is in front of all others.